in 2015, we weren't talking about interest rates.
No.
In 1990, we weren't talking about interest rates, and they were like 15%, 20%, like 12%. They was like, so like people just started talking about interest rates back after COVID hit, because that's when they effectively got weaponized, went to zero, and became crazy. So people do talk about it all the time right now with housing. It's probably going to take another year before people stop thinking about interest rates as part of the equation. But now that the Fed is telling people, hey, we aren't going to make any changes for the rest of the year, I think people will now get off the fence. I think that now that they're saying, hey, not much is going to change and we don't see anything changing, buyers should get off the fence, because the people that do want to buy, they don't want to wait a year, especially if they're not actually going to save money. And there's a better chance prices are going to go up too.
Good morning, good afternoon, good evening, wherever the heck you're listening from. Welcome to the King's Table podcast, the #1 world's podcast, the new, thriving, growing podcast that you listen to every single week. I'm here. My boys are here. Welcome back. I'm Ashish Nathu, your host. Of course, I'm joined by my good friends, the Trend Spotter, going to guide us through the turbulent times of the Fed's announcement today, Mr. Aaron Amuchastegui, and of course, the gangster, the sage himself, Mike Ayala, the gangster. Today we have the gangster in the house. And of course, we're entrepreneurs. We're running around. So Maddie couldn't join us today. Let's see if he can get out of what he's doing and join. But if he can't, then we all understand. We're going to miss him, of course. But we got a full docket today. Lots of fun topics to talk about. And we're just going to get into it. How you guys doing? Ready to go?
Doing good, man.
Let's do it. So let's just start hot and heavy, right into the Fed. Literally, as we're talking, the Fed's making an announcement. Mooch, let us know what's going on here.
Yeah, let me
Powell, I think, is literally speaking as we're speaking. So let's get into it.
Powell is speaking right now. You guys are going to be super shocked unless you've been listening to the King's Table podcast for a while. Then you might not be too shocked. I also love, Ashish, that you can say this is the #1 podcast in the world. I feel a little bit like CNN saying whatever we want for the headline, but you have to prove to us that we're not. Like, you're allowed to say, I mean, I can say we are absolutely the best podcast in the world.
That's right.
There's probably a gray area of like, maybe we can't say #1 most downloaded, but we can say the best in the world.
I can just say #1 in the world. Like, it's ranked by what? Like, based on our attendance? I attend #1 all the time. Like, whatever.
Yeah, the #1 King's Table. We can confidently say we are the best King's Table podcast out there, because there is more than one of those. And and I think we'll make it past this. Hey, check this out. Fed officials dial back rate forecasts. Shocking. They signal just one rate cut in 2024, which was funnier because even earlier today, this morning, they said, hey, we think there's going to be 2. So Bloomberg this morning said, oh, instead of 3 cuts left this year, we think there's going to be 2. But just now, as it went out, I tried to share the other article and didn't hit. Let me see if I can jump around. So there was an article this morning from Bloomberg that said, hey, instead of 3 rate cuts left in the year, now we think it's going to be 2. And they were predicting that was the Fed was going to say. Now the Fed has said there's just going to be 1 rate cut in 2024 of 25 basis points, which we also know means that may or may not happen. And as I'm going to share one other screen that kind of shows what they were talking about this morning, and then we can talk about what it really means. And all it really means is that like the economy is still rocking. Mm-hmm. Right. So it says FOMC may project modest interest rate cuts in 2024. And so they think, like, what's the federal fund rate going to be? And so this prediction said that, by the end of 2024, it's going to be 4.9. And by the end of 2025, it's going to be 4.1. Now, I guess that doesn't matter because they're all guessing. So in other places that are guessing, they're guessing that the unemployment rate is going to stay the same the next 4 years.
Mm-hmm.
They're guessing that inflation is going to stay pretty much go down a little bit, but pretty much stay the same for the next 4 years. core PC inflation, I think, is going to come down a little bit. Now they're just guessing, so we can't really act on those guesses, but we can know that the market is going to act on those guesses, and then you can decide to choose accordingly. Ashish, back to advertising ketone
Just
juice
kidding.
over
Tastes
there.
like crap. Tastes
So
like
I gotta ask. I love that stuff, but are you in ketosis? Do you do a meat only, fat based diet?
Nope.
Then why would you?
I do morning fasts, and I think it's more of a mental thing. I don't think it really does anything in terms of keeping me in ketosis. Maybe it just stimulate. I don't even know what it does.
It'll put you into ketosis to start with. So if you do a morning fast,
yeah, I normally
to where you're
intermittent
burning
fast
off
until like
most of your. If you still have carbs in your system, you're not quite in ketosis. But if you're almost in ketosis and then you drink one of those, it puts you into ketosis. Then if you go exercise, you'll be burning fat instead of carbs. So
I do feel a boost of energy when I take it when I'm fasting.
Yeah, you'll get a boost of energy for sure.
Yeah.
I do those when I did a marathon in ketosis where I wasn't taking any sugar. Ran a marathon.
We're doing this during lunchtime, so I need to boost through it. You know,
I
you don't want me to get hangry on the podcast.
Well, away from my distraction of me trying to correct Ashish on his on his health or give my opinions on that. I think the Fed rate stuff is pretty interesting. And I snicker and say like this is what we've been saying for a long time, but I like to remind people that a year ago this time and like 9-10 months ago, when they said there were going to be tons of rate cuts and we said there were not going to be tons of rate cuts and maybe none, people yelled at us, said they hated us and that we were totally way off. And the bummer of what happened of people, I think there were a lot of real estate agents and real estate investors and people that made decisions based on this idea that the Fed was going to cut rates and that rates were going to get lower later. So they postponed refinances. They maybe bought deals with higher rates, assuming they were going to get stuff refinanced. They just negotiated kind of heavier and they dug their foot in the sand. Or some real estate agents and investors kind of thought they were going to get bailed out. They said, all right, real estate right now is tough. It's tough to be a buyer's agent or it's tough to sell this house. But as soon as rates drop, this house is going to sell, right? So some people, instead of lowering the price of a house that people couldn't afford, they said they're going to wait for the rates to drop and then the houses are going to sell. And so I think that's the most unfortunate thing about these predictions. And so those other predictions that I just shared, I think it's going, so you personally don't do the whole, well, rates are going to go down next year, so I'm going to make my decision this way. Because they are guessing, and we've clearly shown that that our guess is better than theirs, and we're not any more educated. Our guess shouldn't be better than theirs. It just was this time, right? And I had reasons that I made it, but I could have just as easily been wrong. I think the point is like you can use predictions and stuff like that in order to decide if you're going to buy gold or short a stock or do certain things based on the market does believe it. So I still will be surprised if we cut rates one time this year. But it's amazing how quickly it has flopped from the beginning of the year, 5 projected rate cuts to now we're only 6 months in. And now they've already said we're only going to do one before the end of the year.
Mikey, what do you think is there any bias here with presidential elections, and how do you think it affects sort of medium-term, long-term in real estate investing?
So I mean, the presidential election, the only thing that it affects, here's what's interesting. So the reason why they're holding rates is because the economy is still doing well.
Mm-hmm.
If Biden gets reelected, I think then we at least know what we're up against. And all of us that are optimistic about a regime change might just settle in and go forward. So nothing changes. And if another administration gets in, then people get excited. So I don't know. You know what? I think the real issue here, and I pulled this up as Aaron was talking. Let me just share this really quick. So we talk about this over and over, but I think we're focused on kind of the wrong thing. And when you look at this period of time, and I've said this for a while, and Aaron talks about this all the time, like, you know, you come up here in 2008 and we have a crisis and everything's just kind of flat. We get drunk on cheap money. We get used to a new normal. This has never been normal. And I know we're going to get into gold, but when you look at, and I talk about this all the time, like we're in this, this is a twofold thing. Like, you know, we want to look at history and we want to say, you know, history repeats itself and everything else. But if you want to look at history, the current interest rate is not expensive. It's just normal. And we're so drunk on cheap money because of new monetary policy that we just can't get used to it.
Mm-hmm.
And, you know, just from a practical perspective, you know, and Aaron, you would know more about this, but I saw an article the other day that the average home appreciation last year was 3%. And Texas happens to be 1%. And, you know, Texas is the market that Aaron and I live in. And because no different than this, because interest rates went up so much, then when things fall, you know, we're kind of crazy. But like when this happens, or we print so much money, or housing prices go up so much. And I love that we're going to get into gold on this, because the reality is houses aren't expensive. The dollar is plummeting in value. The purchasing ability of the dollar is so low right now, because the only thing that investors want is real tangible assets. And that's businesses, that's real estate. That's actually things that I won't get into technology, because that is kind of like the next wave of, you know, the previous real estate brick and mortar business. If you go back 5-10 years ago, it was real estate brick and mortar businesses. Like that was the way that you create wealth. It's tangible assets that have a long-term appreciation value. Technology is going to change some of that, but this whole, I'm kind of like, the more I hear Aaron talk about interest rates shouldn't go anywhere.
So let's talk about what happens if interest rates don't change for a decade. What changes?
So just again, I'm more of a simpleton here, but if interest rates don't, so I'll tie this back to what you said about an administration. If interest rates don't change for a decade, I don't think anything changes. What we get accustomed to is the new way. And so inflation might cool a little bit, but the year over year growth, when you come out of a period like we were in from 2020, and actually you can trace this back even further, the teens were the greatest period of time maybe ever to be alive for business owners, real estate investors that wanted to leverage debt.
Totally.
But I think those days are gone, and we're going to get used to kind of a new normal. And Aaron has said this multiple times. He said it again today. Like the economy hasn't cooled that much. And so what's it going to take for the economy to cool? People are going to have to freak out. Well, I don't foresee, I mean, unless there's some kind of black swan event or a used car bubble or a student loan bubble or a housing bubble, I just don't know that we're going to achieve that, because again, I know history repeats itself, but in this case, I don't think we've ever been in a place like this before where, yes, houses are at an all-time high, but the reality is what I was starting to say with the housing market. So Texas is up 1%. Let me just button this up with this thought. So back to what Aaron was saying, you know, if somebody's waiting to buy a house because they think housing prices are going to drop 3 or 4% next year, I don't think that's going to happen. But also, you know, simultaneously, even if interest rates, people are waiting for interest rates to come down to buy houses. But the reality is, if houses go up 1% or 2% over the next year and your interest rate goes down 1 or 2%, are you in any better spot? No.
Yeah.
I mean, there's got to be something fundamentally. I like what you said. Yeah, go ahead. Mooch, go ahead. What happens if nothing changes for a decade?
If nothing changes, then like this is what happens to housing. Because so this is like a graph of Texas home prices. So like from 1990 to 2010, it just goes up 4X. A little bit.
5X.
But that's over like 20 years. Over 20 years, you know, it goes up on this, so where it almost doubles, but it doesn't really do 5X, right? It got crazy to 2015 to 2020. So 2015 to 2019, before COVID hit, Texas had a pretty strong run. I got super lucky. I started investing heavily in Texas in 2015. But that was total luck. But prices, like you could see at 2020, the example of the price jump that happened then. But over time, when nothing changes, housing gradually goes up over time. It's not too crazy. It's not too unaffordable. It doesn't grow at a faster rate than income. I bet if you lined this up over top of like income, the income increasing would be the same as the housing increasing over that time. We had this big old bubble after 2020. But we also had it with other types of businesses too, because I know we're talking about housing, but like it could affect all sorts of things. It happened with software companies and their valuations because debt was super low. And so you'd get this multiple. It happened with buying businesses and selling businesses because multiples went super high because they're like, oh, if interest rates are zero, then somebody could potentially borrow 3% from a bank and go buy a company that only makes 5% a year. And so they could pay 20x. They could pay 20 times net revenue on purchase prices of businesses and things like that. So I think what happens, like if nothing changes, we still have to figure out if there will be a correction or a level of a correction based on that last spike that happened over the last few years. And maybe it has to get back down in line with where that line would have been had nothing happened. But once everybody gets normalized, once everybody gets used to it, once everybody says, because I think in 2015, we weren't talking about interest rates.
No.
In 1990, we weren't talking about interest rates, and they were like 15%, 20%, like 12%. They was like, so like people just started talking about interest rates back after COVID hit, because that's when they effectively got weaponized, went to zero, and became crazy. So people do talk about it all the time right now with housing. It's probably going to take another year before people stop thinking about interest rates as part of the equation. But now that the Fed is telling people, hey, we aren't going to make any changes for the rest of the year, I think people will now get off the fence. I think that now that they're saying, hey, not much is going to change and we don't see anything changing, buyers should get off the fence, because the people that do want to buy, they don't want to wait a year, especially if they're not actually going to save money. And there's a better chance prices are going to go up too.
Which will make prices go up.
Yeah.
So I was thinking about this the other day, and I think a better question: do you believe that the federal government will stop spending money that it doesn't have?
No.
Okay, so last year the government spent like 6.13 trillion on government spending. And I was actually listening to Ray Dalio talk about this, and he wasn't positioning it this way. But if you just think about the simplicity of this, until the government stops spending money that it doesn't have, what does it have to do? It has to sell bonds. Because I think sometimes, from a practical perspective, when we hear the term printing money, we think they're just pushing a button and printing money. But really, at the end of the day, they're selling debt. They're selling bonds, right? And we've talked about this before, but when the countries and the investors that are buying our debt are not as comfortable as they've been in the past, there's a cost to that debt. So do we think that China wants to buy our debt right now at 2%? No. So in order for the government to keep spending money, what do they have to do? They have to keep the bonds at a certain rate, which is 5.25% right now, in order for people to buy the bonds, in order for the Treasury to print money. That's like the simple version of this. And so unless we think that one of two things is going to happen, the government is going to stop spending money it doesn't have, or number two, other countries are going to rush in to buy our debt at 2%. We're not going to see 2% debt anytime soon. So I know there's some other factors within this, like inflation.
No, that's pretty simple. That's pretty straight on. That's exactly how it's going to work.
We're not going to 2% interest rates. Yep. And I think the real question, and Aaron keeps coming back to this, but if we want to invest in something that's a natural hedge against inflation, which is going to continue unless the government stops spending money that it doesn't have, inflation is going to continue. Can it get down to 2%, 3%? Probably. But unless the government stops that and quits making up fake numbers, what's the best place to invest that is inflationary resistant? It's businesses and it's real estate. I mean, real estate has traditionally, just even to what Aaron was saying in that chart, there's no way in my brain that a house that you buy today is going to be worth less in 5 years, 10 years than what it's worth today. Why? Is it because the house went up in value? No, it's because the purchasing power of the dollar went down.
Yeah. It's a great analogy. And I think that happens whether it doesn't matter who gets elected.
It doesn't matter.
Right. Like both candidates that we have will spend more than not. Now, I think that I think Trump will spend less than Biden, but both of them will spend more than the U.S. can afford. And so all it means is scale. So like, yes, no matter what, inflation continues. And inflation was a tool that the government wanted 10 years ago because we couldn't get things to inflate. So I think either way, it's just important for people to realize that even though like you guys will hear me say, I want to see Trump get elected with Mike's argument right now, he is also guilty and was guilty when COVID first hit to spend money we didn't have to try to stimulate when everybody was freaked out.
Well, and there's an argument to be made too. By the way, I want Trump to win as well. But there's an argument to be made if you're like a staunch, hey, we need to slow down inflation. There's an argument to actually be made that, one component of that is government spending and needing to issue bonds. So keeping those bonds at a place where people actually have the desire to buy those. But the other component of inflation is not having a more healthy economy than what we have right now. And I think if Trump gets elected, we're potentially going to have a strong economy, which is going to create inflation.
Yeah. I mean, you said it pretty clearly, right, Mike, that if Biden gets elected, it's pretty much the same. And if Trump gets elected, there's just more stimulus. Let's talk about gold and let's keep talking about this topic. Gold is getting harder to find as miners struggle to excavate more. According to the World Global Council, mine production inched up only 0.5% in 2023 compared to a year ago in 2022. The growth was 1.35% year on year. And the year before that, it was 2.7%, while in 2020, global production logged the first decline in a decade. So global production of gold seems to be decreasing. We just talked about how the dollar has been devalued and the purchasing power, obviously, with inflation. And gold prices are higher than it's ever. What is the price of gold right now? $2,340 as of today. On a historical 5-year, gold has increased 74% in the last 5 years. Mike, what is going on with gold? Give us some context in terms of supply and demand, but also what's up with this mining? Why is this an issue?
So I have firsthand experience with this. I lived in Elko, Nevada. I've mentioned this before on this podcast, but it's the largest gold mining region in North America. Kara's dad and brother, her dad's actually getting ready to take another contract in another country. He's been in Saudi Arabia, Indonesia, all over the place. And my brother-in-law, Nick, who used to be my controller, is a big up on the financial side at Newmont. To answer your question, there's a couple things that I want to bring up with this. So the first thing that I want to share, and then I'll get back to, the question specifically, but here's an interesting statistic. So colossal central bank buying continued in 2023. So in 2023, central banks bought 7,500, it's actually 77, almost 7,800 tons of gold in 2023. In tons. Now, just for some perspective, that's 36,684,920 ounces of gold. 366 million ounces of gold. The central banks bought, and this ties back into the inflation conversation because our central banks buying the US dollar, sure, to some degree, but why are the central banks buying gold, and why do all of us everyday people think gold is a barbaric relic? So I'll just plant that there for a second. But another thing that I wanted to show you guys, well, actually, I don't need to show it to you.
That's pretty telling, isn't it, Mike?
It is. And in 2023, the world produced 3,000 tons of gold. So the buying rate of the central banks alone is more than double the production right now. That doesn't count all the, tinfoil hat individual buyers, people that are buying gold and silver in their, self-directed retirement accounts, hoarders. People out there think that gold bugs are crazy, but who's the biggest buyer of gold right now? The central banks, and they're buying more than double the production. And this is the last thing that I'll say with it. Having firsthand experience in this, I was just talking to my dad the other day about this, and the gold mines in Nevada they constantly are redoing your contracts as vendors. My dad is charging the same hourly rate right now that he was 10 years ago, and the mines are trying to beat him up to get the pricing lower. Why is that? Why are miners losing money? There's two parts to this. So gold is a scarce resource. It's hard to find. And I've talked about this before. One of the main reasons why gold producers go overseas is because there's not as much red tape. But I'll set that aside. So gold is a scarce resource. And from the time that they find a gold reserve, it generally takes about 10 years to get to a point where they can actually mine that gold. And a lot of times it's 3,000 feet below the surface. And they have to move thousands and thousands and millions of tons of dirt to actually get to the gold. And so it's a really costly venture. But back to inflation, I'll tie this together to today. The demand for gold is as high as it's ever been from central banks, while all of us everyday people think that gold is a barbaric relic. And central banks are actually wanting it. Central banks don't want the US dollar. They want gold. Why is everybody monopolizing gold? It's because it actually has a true store of value. But at the same time, the pricing of the miners is going up because of the same reason it is for us. Diesel fuel, cost of equipment, cost of labor. We used to drive an hour minimum to get to these gold mines. Our guys would work a 14-hour day, and maybe 8 hours of that day was productive. So gold mining is really expensive to get to an ounce of gold, but they're getting affected the same way as inflation. So the challenging part of this, the reason why you see miners' stocks low and gold going up, is because the miners are getting beat up because their costs are going up. So people don't buy the miners. But this is not investment advice, but it's periods of time like this where you see gold going up and the mining stocks going down. It's a great buying opportunity, because do you think that gold demand is going to go down? Not when we're producing 3,000 tons a year and just the central banks alone are buying double that.
And that is, I love your take and your knowledge on that. Like, it's the supply demand equation is cool. And I love some of your personal knowledge that's saying, hey, it is more expensive to create this resource right now. And so that in turn is going to create scarcity. It is going to lower supply, and it is going to drive up prices. I think, we still need to get a Bitcoin expert on here, because it's
like a real Bitcoin we're talking about.
Right.
It's halving and it's physical.
Yes. I was reading about the halving of Bitcoin, which essentially means like soon, like you guys will correct me, but soon, like there's a certain amount of computer usage and electricity and everything that it takes to make a Bitcoin. And pretty soon during the halving, it's going to take twice as much to make the same amount. So it's going to cost twice as much to create it. Which is, in theory is going to raise
it's the same concept
like crazy. I want to add a strange little thing to this. So gold has gone up like 6 times in the last 30 years. I have a chart that I've pulled up. And
do you think they psychologically made the Bitcoin image a gold coin for a reason?
Of course, I guess.
I think the reason why gold is God's money, it's often been referred to as God's money, is because there is an infinite supply, which is the opposite of what we're talking about with the dollar. If you really want to understand the dollar, then just look at gold, because they can print as much dollars as they want as long as they keep the interest rates where they need to be for people to buy that demand. But with gold, it's finite. And the reason why Satoshi, who I still think is Elon Musk, created the Bitcoin infinite and the halvings. This was a very well thought out structure to where it is an infinite supply, which will increase demand. So we talked about gold. Briefly hit on Bitcoin, but I have a really funny comparison when we're talking about investing in assets. Look at this. There's this article of something that I've come into lately that I think is maybe actual real. It says Chanel bags are better financial assets with strong demand. So it talks about luxury handbags have low volatility, hence providing more stability for investors. So investors are actually investing in things like these Chanel bags instead of gold
And even if it says Chanel bags can protect you from inflation and give you extra financial security during recession. And it talks about the prices over time. So I mentioned that gold has gone up 6 times in the last 30 years, right? Well, so Chanel bags very similar. So 1990, the price is $11.50. That same bag today, if it was just put on a bookshelf and looked and bought today, is more than $8,800. And there's these other, like, I'm not going to say it right, the Hermès Birkin bag, right? Similar, 1984, the bag was $2,000. Today, the bag is $12,700. I bet there are a lot of examples of stuff like this in the world. Now, why should gold be different than these? But really, again, it's baffling when you go through like these historical charts. There's got to be other things out there that are hard asset type products. It's funny to think about a purse the same way that you might think about gold. One of the things that's always been exciting about gold is malleable. So it can be made bigger or made smaller. It could be made into a coin. It could be made into a bar, into a brick. You could change the sizes of it easier. And I understand like classic cars are similar, but you have to store those. Those cost money to store and they're not malleable. You can't just sell a tire of a car if you want to. And so that's why gold may be better. Or same with like a bag, right? You can't sell part of a bag if you buy
gold also doesn't appreciate. Gold doesn't depreciate. It still stays gold.
Right. But this is saying the same thing happens if you bought a car like that and put it in storage, or you bought a bag like that and you put it in storage. It's not saying you buy a bag, you use it every day and it's your investment. It's literally saying people are buying in these bags and putting them in airtight vaults.
Yep.
And going, hey, this is going up at a faster rate than gold and a faster rate than inflation. And so it's funny to think that like we talk about investing in hard assets when inflation's high. I do think inflation is now going to, I think it's going to be moderate. Inflation's always going to be there. I think it's going to be moderate. I think we're just going to keep the rates the same. It's just going to stay where we're at because the government's going to keep spending. I think government spending is going to get tightened up a little bit. So we're always going to have inflation, but we're not going to have the inflation that we had over 2021. And this is just the new normal and now act like it. But it's funny. Whether you want to buy gold, you buy Bitcoin, you buy Chanel handbags, those sorts of items are good because inflation will always exist.
Well, I think we're going to be digesting this for many years to come, and you can always keep tuning into the King's Table podcast to see how we're analyzing all this. Yeah, I think definitely we're talking a lot about some fundamental concepts of supply and demand, and I would make a very strong bet that for the next 5 or 10 years, we're not going to go lower than 4 or higher than 7. And then we're going to stay in that bandwidth for the next decade. And a lot of things are going to change. And in order to watch what's going to change and understand it, come here for us to talk about it, figure it out. I think real estate's going to be a fun category to watch for the next decade.
Can I share? I heard Jeff Bezos say something the other day that kind of correlates to what Aaron was saying, whether it's purses, gold, bonds, houses. Jeff Bezos said, what I think about, because Jeff's investing in, space travel. And he's like, that's a moonshot, like literally, right? But he said, the thing that I think about on a daily basis is what is going to stay the same that people are always going to want. And he made this comment, he said, are people going to want to get their product slower? No. Are people going to want to get their product cheaper? No. Are people going to, so he's just like going down this thought process.
He's going through the process of logic.
Yeah. Like supply and demand, as Aaron's saying. And so even with the purses or a Ferrari, God, I wish I would have kept my 1981 Ford F-150 because I was looking at one the other day and it's like $35,000 for a Ford F-150 from 1981 that's in good shape. And my father-in-law gave it to me and I think I sold it for $1,800.
Yep. I had one of those in 1983.
Vintage still sells.
Yeah, but we were on Congress the other day and I actually took a picture of this and put it on Instagram. There was a picture of a t-shirt that had holes in it that was like literally an old Tupac t-shirt that somebody had maybe 5 different people have worn. And it was $200.
Yeah.
For a vintage t-shirt. And I was like, But the reason why I'm bringing that up is like, there's no way you would have ever thought that like I should keep my Tupac t-shirt because somebody's going to want it someday.
Yeah.
Or an Hermes bag. Or, you know, if you look forward 10 years, are people going to want Rolexes? Are they going to want Hermes bags? Are they going to want the Ferrari? We don't know about some of that stuff, but I'm confident that people are going to want houses. I'm confident that people are going to want gold. I'm not confident that people are going to want Bitcoin. I look at Bitcoin as an Hermes bag. You know, if Bitcoin was $10,000 right now, would I buy some? Sure. Am I going to buy it at 60? I just don't know.
Right. That's a really fair point and I'm glad that you had like a contradiction or a way to at least poke holes in this other concept to say like maybe the demand for, you know, lady handbags will continue to go up. Maybe technology changes in a way that it never does, but maybe it will continue to go up forever. And but there are some things that we know people, you know, can live or live without, and maybe wealthy women can't live without a $20,000 handbag, and maybe that'll be like that forever. But
we also just finished the last 20 years of the most consumption that any civilization has ever gone through. Like we've just consumed so much shit over the last 20 years. And now is it a step back to say, are we consuming things that are valuable or invaluable?
I will say just on the Hermes bag alone, I think it's a good investment. And I'll tell you why. So I'm not, when you said, you know, Aaron poking, I think it's a good investment because they have artificially kept supply down, and like you can't even buy an Hermes bag like that one that that actual one that you pulled up, or like a Ferrari or, you know, a Lamborghini. Like they artificially keep the demand down because they know that they can only manufacture so many, and in order to keep the pricing up, like there's literally years where you can't even get a Ferrari unless you already own one. And I saw a lawsuit the other day that Elon's in right now because in the contract for the truck, it's literally built in the contract that you can't resell it for 12 months. Mm-hmm. And I think that was more of a, hey, we're rolling this out and we don't know how good of a product it is, and we don't want people to throw them on the market, so we can't sell new ones. But back to the Hermes bag, like I think it's going to be a good investment no matter what because of the way that they've positioned it. And same thing with Bitcoin, not artificially, it's the supply is limited. The reason why the dollar is not a good investment because there's no limit.
Yeah. Yep. You know, one really cool, I know you, the only thing that will bring housing down, and where I think that we will see stuff over the next 10 years, is technology. So I do think, because we're the modular housing stuff that we're doing is building houses in months and in like 60 days instead of 180 days, and the price is half of what normal stuff is happening, and the quality at the end of the day doesn't look any different. And so, and that stuff's just getting started. And so I do think that like what can bring, so whereas scarcity is going to keep Bitcoin or gold or bags that demand, housing is scarce because everyone is always going to want houses and people keep, you know, being born. But I do think that housing will eventually have some balances out where technology brings costs down, because that's the whole goal of the stuff that we're doing right now is delivering brand new homes downtown Austin for like $800,000, which even though that's a lot compared to a lot of places, it's like 40% less than what people are seeing. So in 10 years, we will see some crazy technology that should at least bring the cost to build houses way down. And I am curious about what that'll do to the market when it happens.
And even as the cost of the houses come down, the profit margins are going to be higher because of obvious. What I love talking with you guys about is you guys are students of business investing, and you're constantly learning. Like I love learning from Ashish's lessons, Aaron's. I was talking to Kara yesterday, and I've been on a road show, as you guys know. And the one thing that has pissed me off over and over and over walking into my mobile home park communities is every single time I walk into one of my communities, I have a brand new home. Well, it's not brand new anymore, but it looks brand new. It's a 2-bedroom, 3-bedroom house. And I have a desk in the front office, and this house is that I can rent for $900, $1,000 a month is our office. And I've been telling my team for like 3 months, I'm like, get mobile offices, get some type of stripped down office and rent this house or sell this house. Kara came to me yesterday and she said, I got prices on offices that we can have set up in the community. We can take one of our empty lots and put up like a construction office or whatever. And I'm like, okay, show me. For a 2-office mobile office with 1 bathroom, it's $60,000.
Jesus.
And I looked at that and back to, I'm closing the gap on Aaron's comment about housing pricing coming down. It blew a hole in my whole pissed offness for the last 90 days because I can buy a brand new 3-bedroom, 2-bath house and turn it into an office for $50,000, and a mobile office is 60. And I'm just like, we have to constantly be thinking about our thinking, because there's no way in my brain. I'm pissed off because we have a house that I could sell or rent that's costing me money. And in reality, it's cheaper for me to just leave the house there because the cost of housing, manufactured housing, has come down so much that I can't even get a mobile office for cheaper than I can get a brand new mobile home.
Well, it goes back to supply and demand, doesn't it?
Yeah.
So good. Okay, well, I want to keep going. We've got a lot of talk. We can keep going on that topic. Let's talk about supply and demand. Let's talk about artificially low prices. Let's pivot to GameStop. It's been a fun 4 years of this stock. We talked a little bit about it last week. I'm going to pull up the chart really fast and give the listeners a little bit of background here so that we could have a good conversation. Mike, I don't know if you remember, but like when we did our retreat in 2021 early, that's when GameStop started roaring. That's like literally when the whole GameStop era started. For people that are not aware of this, it's a really great lesson. There's actually a Netflix documentary called Dumb Money that does a really great job of sort of simplifying this whole story and how it happened. But because I don't want to get too much into it, but essentially back in early 21, end of 2022 or 2020, this company had a lot of downward pressure from short sellers, specifically Melvin Capital and some really large private equity or investment firms. This guy named Roaring Kitty, who was an investment analyst, some guy out of his bedroom, some young kid, I don't even know where he's from, was doing stock analysis and found the opportunity with GameStop and started just live streaming his analysis on GameStop. Started getting a really great following, and just sort of the way that people think about Bitcoin now, like the hold until you die or whatever, the hodler guys. He created this cult following about GameStop and just spiked the price of GameStop. And you can see it was floating around $2 or $3 at the end of 2020 and got as high as almost $81 and sort of averaged around $50 to $60 for almost a year. Now, the dynamics of what that does is when you're short selling at $3 or $4 and the price goes to 60, you're like 20x negative on your investment. So you have huge capital calls. So these big investment firms basically went out of business or had hundreds of millions of dollars of losses. And private investors made a ton of money, but then there was Robinhood, who shut down trading, and it ended up being a huge thing, ended up in front of the Senate, all that kind of stuff. Well, anyways, it kind of died down. This guy disappeared for like 3 years. Okay, so I'm going to fast forward to like the last 6 months. You can see it started trickling down to 10. Well, in the last couple of months, it started roaring again, all by this Roaring Kitty sending I think he posted something on X we talked about last week. Anyways, I want to show you this video. Can you guys see my screen here?
We can still see GameStop.
Okay, I want to show you this. Last week, okay, he did a live stream on his YouTube channel, okay, where he shows his position. This was on June 7th.
Those positions are there. Those positions are there, but I'll do it.
Okay.
I'll remove it. Don't make me.
This guy is crazy. So this day, he's showing his position in E-Trade, okay? His position is currently, it's hard to see here, but his position is down $235 million from basically a 30% price drop in one day He has 2 positions, GameStop, and he's got some June 21st call options at $20. Okay. His total value this day, again, it's hard to read. Looks like $30 million of total assets, total unrealized gain, $145 million. And that day he lost upwards of $230 million. And he is literally live streaming this thing like a crazy guy. And he's dressed up with bandages and all that stuff. Like he took a big beating that day.
Mr. Robot
He's sitting around drinking beer.
I learned a thing or two and I know how to delete that. I don't want to do it. I don't want.
You just gotta love it, man. So just a fun time to see. I love how social media has turned investors into these big things. And he really is not doing anything illegal. He's just doing analysis. If you like it, you follow, you support him. And the stock has been raging. But any thoughts on this, guys? I just thought it was super fascinating that this guy is like losing $230 million and he's just joking around and having fun. So fun.
Yeah, and he's
Crazy.
making big bets. It's hilarious. I think when everything did happen and he had to go speak in front of Congress, he actually did get in a little bit of trouble because he is a like licensed stock trader or something like that. So something came out that like that he actually does have a license and he was supposed to disclose that. That's like a real estate agent not telling people, hey, I'm a licensed real estate agent. Which most people, it's like, well, yeah, he should be able to do his whatever. He should be able to do his podcast, his blog, his like live streams that he was doing. You know, and the other side of that, it was funny when there was a chance to, if you watch that documentary about it, it really does make you get really angry because it would have kept going. The regulators, the people in control figured out a way to stop it. They're like, okay, you can't buy any more GameStop today. You can only sell it. Well, and we're going to shut down Reddit so that way you can't figure out what everybody else is doing.
To each other.
And you can't see Roaring Kitty go live. And so now you don't know what to do. So all you do is you wake up and you're like, I'm not allowed to buy any more stock today. I'm only allowed to sell. And they've shut us down online. Oh my God, we got to sell. They start selling. Of all the people that should have gotten in tons of trouble, it should have been, you know, Robinhood and those other places. And then they were still questioning him. And I loved it at the very end of his interview back, I don't know, a couple of years ago. He just goes like, he says something else. He goes, I like the stock, you know, and it was like that was like the big boom
I'm
moment.
Continue to hold
because that's like what he was always saying every day. You know what? Just something about it. I just like the stock. I was really hoping 3 weeks ago, like when he started coming out again, I had shared a post that was like, hey, like a guy that can move markets. So like if Jamie died, so Elon Musk says, go Doge go, right? Something on Twitter. And Dogecoin goes through the roof because all Elon said was like Dogecoin. You know, Jamie Dimon says something, I like this, stocks go up like crazy. Why not should a guy like Roaring Kitty be able to say like, just come out of hiding, tweet something and the stock goes crazy. But he did buy like a bunch of options and stuff like that. And I had posted this thing like, hey, if the stock hits like 60 today, this kid's going to be worth so many gazillions of dollars based on his GameStop stuff. But it is hilarious that he can go. I think to him, it's like Monopoly money.
Well, I think the reason why this is so important, and we've seen a few circumstances of this in the last 5-7 years, you just mentioned Dogecoin, where either the government, institutional investors, the mainstream media can no longer control the narrative of where people are investing. And somebody who has influence on social media, a business leader, somebody like Roaring Kitty, can make an opinion and tens of thousands of investors can flood into a price that's not on CNBS. That's new. And I think that's what's really cool about this. It's really powerful. In the documentary, they explain, Mooch, what you just said, where they actually infiltrated the system and shut it down so they could try to maintain control. And I don't think anything really came out of that. But we're going to see more and more of that. We're going to see, you know, we may, if we grow, I think about that to like all the people that when people look at people like us or other influencers online and you ask the question, man, that guy's he's a successful guy. He's super busy. Elon Musk, he's so busy. What's he doing on Twitter? Why does he spend his time on Twitter? Why do people all these big entrepreneurs, why are they spending all this time on social media? Well, it's because they need to get influence. And once they have influence, you have a lot more control of your destiny. You can make people listen to you. You can make people do things, and you own your customer. So I think that's a trend that is not going away, which is why we do this. So
I love it.
Mikey, what are you thinking? You're noodling over there. I can see it. I can hear it over here.
I
can hear it.
Like empty marbles rattling around in the brain.
I can hear it today.
So number one, I love it. I think it's great that, in the day of influence, social media, everything, that we can learn anything we want to learn. We can follow everyday people that are for the everyday person. It concerns me a little bit though, because what we don't talk about is how many people get hurt by, investing in Dogecoin or GameStop or whatever, because they don't actually know what they're doing. And they see a guy like this, who, by the way, I'm in love with this guy. I'm in love with the story. That's one of my
fun, isn't it?
I love
It's
it.
so fun.
favorite movies. But I think the average person should invest in index funds. And I think the average person should focus on their job and, buy maybe a rental or two, or invest with Aaron, who knows what he's doing. And I think we live in a day and age where, whether it's real estate being so easy or investing through Robinhood being so easy, it's really hard to beat the big boys. And I think that's what makes us fall in love with this, is that we have the platform and the opportunity for everyday people to get involved and potentially make money. But I think the reality at the end of the day is, I think 95, 98, 99% of people do not end up like Roaring Kitty. They probably lose. So all I'm saying is buyer beware, because I've done this too. Like I bought GameStop.
Me too.
The last time this was happening, and I don't have the brain space or the energy to watch Roaring Kitty and figure out when I should sell. That's why we fall in love with a guy like this, because he's like, buy, it's going up, and then like sell now. But when the government steps in and the big boys step in and all of a sudden shut down Reddit and everything else, and you can't sell, I just wonder how many people's, lost $10,000 or $1,000 that was like all of their money. And so while I love all of this, I just say buyer beware, because I think most people probably shouldn't be playing. It's no different than an accredited investor or somebody investing with me or Aaron or anybody else. Like, there's risk involved in it. And I think a lot of everyday people don't understand the risk, and they don't really understand what they're getting into. And the average person probably gets hurt. Sure, we hear the stories about, somebody that doubled their $10,000.
Sensational, right? Yeah, it's sensational.
But it's also scary that we live in a time where people think it's so easy to just make money, whether it's real estate investing or, Bitcoin or Roaring Kitty, GameStop. It's kind of scary.
Yeah, there was a lot of that when all that was happening. There became some other stocks that became the pump and dump type stocks that did not have the same impact that the GameStop did. I remember there was a movie theater one that happened. Like everybody really wanted to. of course, everybody wanted to see it happen again.
Did. Yeah, same
right.
Thing
like once it happened once, like BlackBerry. And I had a couple days when like there was a stock on the way up that I jumped in and I threw $20,000 in it. I did it to BlackBerry, put like $20,000 in a BlackBerry stock. BlackBerry stock today is worth zero. Right. So that was actually like a $20,000 investment that the next day went down to like 3,000. And then I was like, oh, don't, eventually it'll come back up. I'll just wait. And it ended up going to zero. Right. Good thing I didn't double down, but it ended up going to zero. And really it was like, yeah, $20,000. And so it didn't kill me. It hurt me. There was moments I wished I had it, but like there's plenty of people that were actually taking out loans, doing stuff like that, and did lose it all on something like that. So that is the challenge of. It's fun to see the guy winning, and it's fun to see the guy winning while he's like flipping off the establishment and being able to laugh at like the idea of like the play money or whatever. Like he obviously looks like he's enjoying himself.
So the double-edged sword of that is that people get to invest in things in a way that's so much more accessible. They have access to information. They can go into Reddit. They can share analysis. right? Investing is just becoming way more accessible. The bad part about that is that if you don't know what you're doing, you can get caught with your shorts down. But I think that's a good thing. We talk about real estate here a lot. You know, you guys can argue that in the last 3-4 years, real estate investing has become the most accessible it's probably ever been, right? For the average day citizen, regardless if you're an accredited investor or not. I think that's good. But then you also talk about, well, this is big boy investing. If you lose, you don't know who you're investing with, and you're going to get caught with your pants down and you get screwed because somebody did something they're not supposed to do. But I think overall, from a system perspective, that's positive, isn't it?
I think it's positive as long as, and this is what I was really getting at. I love what you said, Ash. Like, it's amazing that we live in a day and age where we all have access to this. But the other side of it, I was thinking about Warren Buffett when you were saying that. Warren Buffett is a student of analyzing businesses. And, you know, when you look at GameStop and you look at the cost of the stock versus the amount of cash that they have and their free cash flow, I mean, they're in pretty good position as far as that goes. But when you look at their actual net, like operating income, as I think about from a business perspective, I mean, it would be like if I have a plumbing business that's doing 10 million a year and it's making $1 million a year, and somebody wants to buy that business for 100 million. Like nobody would buy that business for $100 million when it's doing $1 million a year in net operating income. It makes zero sense.
Yep.
And I think so many investors don't think about things from, again, I think we live in a day and age like where, you know, real estate investing is easy. Buy a business, like it's easy. Everybody should do it. And I think everybody should do it. Everybody should buy a rental and learn the hard part about the rental, because everybody says it's passive investing.
Passive,
like real
right.
estate's.
We'll see how passive it is.
Yeah. And at the end of the day, like there's people out there that get their, like Citadel, that get their ass handed to them in a one-off deal like this. But the reality is, like, the fact that we have access, this is all I'm saying. The fact that we have access to stuff like this, and exactly what Aaron said, he put 20 grand on black, and he was okay. If he put 20 grand on black and he lost it all, he was okay losing it all. And I think that what people just need to realize is, if you're going to, you know, invest in a rental, if you're going to buy a business, if you're going to put $500 or $1,000 or $20,000 into, you know, something that Roaring Kitty says, you better do your homework and understand what you're getting into, or be okay losing it.
I have one more thought to this. I remember, Aaron, you told a story about when you started the business and you were in Sacramento doing foreclosures on the footsteps of in Sacramento. I think what people don't understand is that when a few people are doing something, there's a lot more arbitrage. There's a lot more risk reward opportunity. And when you have more people getting into a market, that arbitrage just becomes less. If there's only 5 people at the footsteps, there's more arbitrage. The moment 200 people show up, that arbitrage means transparency improves, supply and demand improves, profit margins get compressed, arbitrage goes down. Yeah. So you have this situation where, you know, big institutional investors, or like you talk about buying businesses or investing in stocks, when few people are controlling the information, the supply and demand, there's a lot of arbitrage. The moment every single person on the planet has that access to information, and some young little kid in South Africa can trade GameStop, arbitrage becomes reduced. So risk actually increases also. I remember I have a very close uncle of mine who made so much money in the 80s in the hotel market. He goes, well, how much money I made in the 80s and 90s, you could never make that money again today. Because back then, you had to know 5 human beings. 5 human beings controlled the market. Today, you go to the internet and everybody has information on everything. So the arbitrage is gone. I cannot make the wealth I made back then today. You just have to make it differently. And I think there's a lot of other follow-up thoughts I have on that, about multi-generations and all these other things that I have going on in my brain right now. But I think that's a good thing. It's also a really interesting dynamic. And you think about Buffett, right? How he was buying and selling businesses in the 80s, 90s has to be different today because the amount of people that are looking at deals. How many people are trying to buy TikTok? Think about that. Given the amount of transparency today, you know how many people are trying to syndicate to buy TikTok right now? Like a dozen people are putting together multi-billion-dollar funds to buy TikTok. So anyways,
Yeah.
efficient markets, capitalism works.
I think when we're listening, Aaron or Ashish, I could say this about you, like, manufacturing furniture for a really nice high-end hotel is like easy at this point. If I'm talking to you, you're a naturally giving person. You want to give information, you want to give knowledge, you want to share what you know, and you want to say to me, Mike, it's easy. I'll help you get into it.
Right.
But what we forget is that you've been doing it for 20 years or 25 years or whatever. And, whether it's Aaron buying stuff on the court steps, I have to be careful as an individual that the person that I'm learning from his job is to simplify this. But what we naturally tend to do as, leaders and mentors and people that want to share information, we tend to forget like how complicated it actually is, because what Aaron learned to do 15 years ago is like second nature to him. And so pulling it back to this, I think, for stock investing is a great example for me. Like, I don't understand it. I understand how to buy a business, but like when somebody shows up and says, this is really simple, just do this, this, and this. I'm like, okay, you're forgetting I'm not a stupid person, but also like you have 20 years of, I don't have the time.
That's a good way of,
I don't have the time to learn that.
I love you were describing it as arbitrage, Ash, but I think for listeners, that really means there's a big gap between like an entry level price and an exit price. Right. And so there's another way that economists talk about is like an imperfect or a perfect system.
Mm-hmm.
And so
inefficient market.
Inefficient versus efficient, imperfect versus perfect, however you want to look at it. When there was only 3 of us bidding on the courthouse steps in 2009, the profits were crazy. We could buy a house for $100,000. It was worth $200,000. Now, for guys like me, it's a perfect system. That's amazing. But the reason it's imperfect is it was hard. The barriers to entry were cash. No one knew how to do it. It was a complicated, inefficient system. Now in 2012, when I got put out of business there was hundreds of people bidding. So now that same $200,000 house was now selling for between $185,000 and $190,000. Now, some people may say so that becomes a more perfect system, a more efficient system, because now the house is selling for much closer to what it's really worth.
Right. Right.
So for the bank owning debt, it was good because now they could more confidently give loans. Right. For places like Blackstone, it made it simpler. And it actually opened up this idea that a normal person could maybe even buy a house on the courthouse steps to live in. So they could actually get a 7 or 8 or 10% discount and get to live in it. And so there's all sorts of, in one case, you're like, well, it's more risky when it's a perfect system when everybody can get in on it. But there's another case that's like, in fairness, should I have ever been able to buy a $200,000 house for $100,000 that was actually perfect? But it was just that inefficiency in the system. Like, no, I was just right place, right time. So it's really cool thoughts about whether it's arbitrage or whether it's that. When you see opportunities out there, people, if there's a bunch of people doing the opportunity, it's probably closer to that efficient and perfect system. You're going to have to figure out a secret to make margin.
I want to move on to the Bukele thing, but I maybe next time I want to talk about how, because I feel like that's what's happening with NVIDIA. And I think there's too much arbitrage and
add that to our sheet.
Market. Yeah, I'll add that to
the sheet. NVIDIA imperfect market. I think that'd be a great thing to hit.
Yeah. So let's talk about Mr. Bukele. Have you guys been following this story? I kind of just got lost into this topic the last few days, few weeks. Actually, it spawned from a interview that Tucker Carlson did with President Bukele, who is the president of El Salvador. I think he's 42 years old now, but he was first elected to as president, youngest president of El Salvador back when he was 38 years old in 2019. Really fascinating story. I want to go through some of these highlights. But this guy essentially was elected as the youngest president of El Salvador. El Salvador was the most dangerous country in the world per capita and now is one of the most safest in the Western Hemisphere. The recent election back in February resulted where he got about 70% of the votes. let's see, is this the primary securing second term by winning 83% of the votes. Okay. He claimed victory. Population absolutely loves him. He was the president where he transformed one of the most violent countries in the world to one of the safest in Latin America.
It's safer than the U.S. now.
It's a safer
If you watch
than
that
the US.
video, there are less murders there than in the U.S., and it was the most dangerous place in all of South America.
Okay. A couple other facts here. He put 75,000 people in jail in the span of like a year and a half. Okay. He created the biggest jail in all of Latin America. There's a lot of well-documented videos, and you can look it up. Another controversial thing is when they were doing this, they were putting people in jail. I forget the term that they use, but essentially, you lose all rights as a citizen, and they were just taking people and throwing them in jail. If they thought that you were affiliated to the gang, they basically put you in jail. So that created some collateral damage, obviously, maybe putting people in jail that didn't belong there, that were not part of the gang. So there's definitely controversy there. And then according to the Constitution of El Salvador, the president can only be elected once. Well, according to what happened, he basically got the Senate, and he also changed all the judges in the Supreme Court, and they were able to get him elected twice. But he's one of the most favorite leaders in the world. I'll stop sharing here. Get your guys' thoughts. Super fascinating guy. He also, which I also didn't click for me, but he made Bitcoin the reserve currency a few years ago as well. So super progressive guy, big on social media, business guy, just changing. And El Salvador is a very small country, very, very small GDP, very small population, but so much change. If you haven't seen the Tucker interview, I highly recommend it. Very fascinating. Mike, you and I were riffing about it in our chat. What are you taking from this? What are you observing? Why do you think this is fascinating, Bill?
So I'll say a couple things. The first thing, what I loved in that Tucker Carlson interview, and if you listen to the last episode of King's Table, you'll remember this. If you haven't, go back and listen to it. But we were talking about, the state of democracy, and we were having a conversation about, Biden versus Trump and Trump being convicted. And I made the comment that I'm kind of, I'm just kind of sad at the state of our country right now. And a big theme in that conversation with Tucker and Bukele was, and he said this over and over and over. He said, what does this say about the state of democracy? And he was talking about democracy works until it doesn't. And he wasn't just talking about democracy. He was talking about, anything works until it doesn't. And they didn't go into a lot of detail around this, but it shows to me, on two fronts, some of the stuff that's happening there in El Salvador seems extreme, but also it gets to a point where it was extreme. The amount of murders that were happening there and the lawlessness that was happening, and people were not safe. Sometimes things get to a place where a drastic, like really drastic change has to happen in order for the status quo to go away. And so when he was saying democracy works, America has worked for a long time. And he said it works until it doesn't. And while he didn't come out and say this, I think what he was really saying is, democracy is at risk, which is what we talked about last time. So I found that very interesting. What's going to happen in our country that's going to, I don't know if it's 5 years from now or 100 years from now, but at some point in time, we're either going to completely change the way that we do things, or there's going to be some, major change that happens. I don't think we're there yet. The other point that I found just really fascinating was when Tucker asked him, how did you do this? And he said, do you want the official answer?
Yeah, I love that. Oh my God, that was so good.
His official answer was, we did cleanup and we stopped the gangs and we
had a plan. We followed the plan. Yeah, all these things.
And then Tucker said, well, what's the unofficial answer? And he said, God. And I was like,
miracle. We prayed. Yeah.
Yeah. And whether you're a believer in Jesus or Allah, I don't really care. But what's so fascinating and empowering about that is when a group of humans come together and they put their faith to something, and you walk out of a room knowing that.
I thought that was really powerful.
Believing in a miracle, because what they did there is truly a miracle.
It truly is.
Yeah. And so I think for us as everyday people, business owners, investors, W-2 employees, whatever you are, it gave me so much hope that like anything greater than you is a whole other level of something. And I think the problem that we have as humans in general is we just don't believe big enough.
He's a gangster, dude.
He's a gangster.
I don't know if you saw, there's another video. I don't know exactly when he did this before I turn it over to Mooch. Get your thoughts, Mooch. He walks in, gets his entire cabinet, his entire executive branch, the attorney general sitting there and saying, here's what's going to happen. I don't want my legacy to have any corruption. So effective immediately, every single one of you will be investigated. Right in front of the attorney general. Like freaking ballsy shit. And I don't want to get lost in India, but India just had its election and elected their president for the third time, and is the only other president that I've seen has the balls to do the things that Bukele is doing. And we need more of this stuff. Mooch, what's going on in your mind? What are you thinking?
I think there's an interesting philosophical question about the end of that article where it says the Constitution said you can't run for a second term, but he was so good and everybody liked him. They found a way to like bend the rules to have him run for a second term, which is great, right? Everybody's happy. He gets 87% of the vote. But man, that is such a slippery slope. Like El Salvador should consider like doing an amendment to the Constitution now if that's their plan. But also the slippery slope is I remember similar things about Putin in Russia, where it was like the Russian, was supposed to be an election every year and you weren't going to be able to do more than two. And then it just changed. And now there's elections every year, but are there real elections? Like there's a lot of countries and a lot of stories where they say, no, we do election every year. And 99.99% of people voted for our dictator again. Right. So in one sense, so I just wanted to like hit that. There's some sort of a moral dilemma issue that I think that is something that no matter how amazing somebody is, it's interesting if they go, let's change the rules to keep this person.
I think that if I'm being honest and I'm reading into his comments about democracy works, you guys have proven that in America, right? He said that. He goes, democracy works, but it works until it doesn't work. And I think if I'm reading into and you really kind of extrapolate some of the behaviors, at what point do you cross the line? We've talked about it here. Where do you cross the line between narcissism and righteousness? Where do you cross the line between democracy and autocracy? It just takes 1 second, just like that. Boop.
So this guy has, go ahead. Sorry.
No, yeah, go. I mean,
so this guy has rescued El Salvador. He has completed a miracle. It is fantastical. And if any of our U.S. states, which are about the same size as El Salvador, if a governor could come in and do what he has done there in a short period of time, I can think of many states where there are bad neighborhoods, where they're struggling, where there's poverty, but great resources in the U.S., that somebody could come do something like that, do the impossible. It would be amazing, right? And they'd be the governor forever. But yes, there is this hint of, hey, I fixed El Salvador and now it's mine. And now it's like maybe El Salvador will be better off if he stays dictator for 20 years. And maybe he is now seeing that, like, hey, like he fixed a country. He doesn't want it to become corrupt again. He loves it. Like, not every dictator had bad intentions. Plenty of dictators were like, I am the best for the job and I love the country. And if anybody else does, it's going to ruin it. It'll be interesting to see how democracy plays out 8 or 10 years there. But I loved that video too. I think any of you guys should watch it. And both Ash and Mike hit the background on it, right? It was lots of poverty, lots of crime, lots of gangs, lots of drug lords, MS-13, some amazing stuff that was that where in places like Mexico and other countries we've talked about, when politicians go try to fix it, they get assassinated. I think one of the things that was on his side was El Salvador. It was small enough that it was manageable. At the same time, arresting 75,000 people and throwing them in jail, it was essentially like when you remember back when they would arrest like the guys that were the drug kingpins in like Mexico and Colombia and all these places, the gangs would just start blowing up the city until they would release them.
I mean, that's like 1.5% of their population.
Right. So the gang,
it's not like.
So that's what you would have to do in these other places to make it happen. So like people are like, why can't Mexico be? So in one sense, he did something that couldn't be done anywhere else, that no one else could do. If they tried the same practice in Mexico, it would be an incredible undertaking because of just the size. Yeah,
let's just look at that. If it was 1.5% of Mexico, that'd be 1.2 million people.
Right. And so that's probably how many people. That's probably how many people are corrupt, part of the organized, like it's probably 1 million people that are part of the corrupt drug world in Mexico. And so that's why they can't arrest a kingpin, because then the gangs start blowing up the neighborhoods. But at the same time, like to be able to gear up to arrest 1% of your population, it was amazing. They simply said like, no, we got to go take out all the people that are committing crime. We got to take them out at the same time. They realized like the plan had to change and they had to do it faster, because as soon as they started to do it, other stuff was happening. So like, all right, we got them on the run. We got to keep them on the run. I think it's fascinating
because you can't do that democratically, right? You have to do it like a dictator. You can't respect people's rights. You can't question them. You can't put them in trial. I think that's what's so fascinating about this is you have success. It's a miracle, but what are you willing to leave behind in order to get it? Super
right. Were there
fascinating.
5,000 people of that 75,000 that were completely innocent or wrong place at wrong time, or who would not be in jail at any other time? Probably, but the miracle happened. It's fascinating. I want to continue to learn more about it. I think any one of our listeners, we can't really apply it to our lives up here, and that's the only disappointing thing about it. But it is a like, wow, like somebody did it. There is a way to like fix something when there's like, hey, there's no solution. Maybe our states could learn from it, I guess is the one thing.
It's good to hear. Like for me, it's been helping me think about my thinking. It's like, it's easy to say like, oh, this is really cool. But then what did I have to sacrifice to get it? And then would I be willing to sacrifice to get that? And like, that's why I think the exercise, the mental thinking exercise is good for us to talk about. But there we go, guys. We're wrapping it up. Another great episode. I think that by the time we record again, Mr. Mooch, or sorry, Mr. Matty Aitchison is going to be a daddy of 3 daughters. But I'm not going to make that prediction, but I think it's a prediction. We'll see what happens. Thank you so much for listening, everybody. Remember to subscribe to the King's Table podcast on YouTube and follow us on Apple and Spotify, and leave us comments, leave us reviews. Make sure you leave us comments on the YouTube channel. We really want to do more question and answer. There's actually some questions from our last 2 episodes, so we'll process that maybe in the next one. But make sure you subscribe to our YouTube channel. We love you guys so much. Thank you for supporting the best podcast in all of the greatest world. We are the King's Table. My name is Ashish Nathu, Aaron Namujastegi, the Sage Mikey Allen, and of course, Matty Aitchison. Peace out. Good to see you, boys. Good conversation. See you next time.
Thank you all. Bye-bye.
Bye-bye.